How are we getting on, people? Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you guys are new to this series, it's basically where we choose a few pairs that we feel hold good potential for the coming week. We break down some of the analysis we have performed to give you guys a better understanding on how we are looking at tackling these markets. If you go on to enjoy this video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. And if you have any questions or queries with regards to the analysis I go through today, just leave them down in the comments below. Now, the first pair we're going to go over in today's video is the XAU US dollar market. We've seen, as of recently, price has broken structure to the upside here on the 4-hour time frames. This right here represents the last protected high within the bearish corrective wave that we saw trading us lower. Once price traded down and into an area of interest, enough demand was introduced to give us the flip in the S&D balance that we wanted. Demand is now outweighing supply, hence why we have had what looks to be first initial impulsive wave, probably on the daily timeframes. So as you can see, this is the first initial impulsive wave. What I'm wanting to see now is for price to actually pull back down, trading us down and into this hidden order block here, which as we go down to the 4-hour time frames, begins to present itself to us. Again, representing a hidden order block here on the 4-hour time frames. Going down to the 1 hours, we're still seeing that it's a hidden order block. But as we go down to the 30 minutes, you can see that this order block presents itself very clearly to us. On top of this, to build on our confluence, this hidden order block is actually situated around where the neckline was for this break of structure. Now, typically when we see breaks of structure, we often see price travel back up to the neckline to test that area before continuing to trade us in the desired direction. So this is what we would be seeing here. You can see how price has traded us lower. Price then comes back down to test this neckline before trading goes higher in the market. So this is a very clean and a very good setup for the XAU US dollar market. And this is something I do want to see play out over the course of the following week. And it gives us the opportunity to get involved in this market with the higher time frame bias. As we know, the higher time frame bias for this market is a bullish one. Gold is a precious metal that is constantly appreciating. So if we can buy in at a good price with a very refined entry, we're going to look at some amazing returns from this pair. So that's my run through on the XAU US dollar market. I've got an alert set here at $3,252 an ounce. Be very interesting to see how price plays out this coming week. Okay, heading over to the Great British Pound to the Japanese Yen. Again, this is another market that's predominantly bullish. Why? Because the Japanese Yen is a very weak currency. The Great British Pound is considered a major currency in the financial markets, and it's relatively strong. So we want to be buying into this market longer term. Due to that, we need to be looking for valid areas of interest, preferably demand zones, to be getting involved in this market. So similar to XAU USD, we have recently had a break of structure to the upside. Again, this high that I've got marked out here is considered the last protected high within this bearish structure. Why? Because this high here created the lowest low. Once we have a break in a high, we are no longer following the laws of bearish structure. We are following the laws of bullish structure. Why? Because we break those highs and we protect those lows. So with that in mind, you can see here that we have a low set, we have a higher low, so we are protecting this low. We have a high. We've then seen price come down. What we want to see now is a new higher high form, breaking the previous high that was set in the market. So in order for us to get involved in this market, we need to find a valid area of interest for price to trade down and into. Well, we go down to the 30 minutes. You can see here that I have marked out an order block for us to get involved from. Now we can see that price has traded into this area of an order block, but we would like to see price actually clear 50% of the order block before reversing to the upside. That way we know that there is enough demand in the market to actually see price go on to set new highs. So because of that, I do want to see price actually pull back down to clear this 50% mark before we have that move to the upside. We will be setting our stop loss just below the zone that we get involved in, leaving a few pips leverage just to avoid being swept out through spreads. Now, in terms of our take profit target, because we have a higher time frame bias that this market is trading us bullish, we can set our take profit just below the last high that was formed. Why? Because we want to see price continue this bullish momentum trading us higher longer term. So setting our take profit just below the last high means that it's an achievable target and something that we should see play out over the course of the next few weeks. So just heading back down to the 1 hour time frames, I do want to see price actually pull back down into this area. I'd love to see price trade into the 192.69 area, deliver us with the confirmation we need in order to enter, which would be a penetration, rejection, break of structure fractally, and then we can obviously look to get involved. Using these points as reference, stop loss, take profit, and entry to get involved in what would be a 1 to 22 risk reward trade. Again, that's my analysis for the Great British Pound to the Japanese yen. Finally, touching base on the Euro US dollar market. This is a market that's been playing out extremely well to price action as of recently, a market that we've taken full advantage of over the course of the last few weeks. We did place a position here in this market last week, took home 4%, which was amazing. Wanted to get involved again in this market throughout the coming week. So again, what we need to be doing is looking for areas of demand for price to actually trade down and into. As you can see here on the 1 hour time frames, price came to liquidate and clear this hidden order block before going on to set a new high. So that would have been a brilliant trading opportunity Friday afternoon. Nevertheless, we go down to the 5 minute time frames. We have a very similar situation. We have two candles, a wick to the upside, wick to the downside. This represents bearish structure within a very bullish phase. This is considered an area of inefficiency. So I want to see that clear before going on to set a new higher high in the market. So price may trade us down like so, setting lower lows and lower highs. Once we see price trade down and into this area of demand, we want to see enough demand being introduced to break structure to the upside before taking us higher in this market. This would be the break of structure. Why? Because this high here created the lowest low. Price trades in, demand is introduced, there's a flip in the S&D balance, and then we start to see price put in the bullish structure we want. So we would look to get involved after the break of structure has taken place. We would look at the impulsive wave that broke the structure, which was this one here. We'd find a refined area, or a refined demand zone from the impulsive wave. We'd wait for price to pull back down and into that, and we would enter on that basis. Again, giving us a lovely 1 to 5 risk reward trade, taking full advantage of this market and the structure that it's put it in. So again, I'm going to go ahead and set an alert here at 1.1323. I believe this is a prime area that price will come to clear and essentially reverse from. It's just a case of waiting patiently, waiting for price to play into our hands, and then we can obviously get involved in the market. But that right there, guys, is going to summarize my Sunday sessions video, the analysis I performed here. I do have some US dollar Swiss franc analysis, but I will be putting that in the Learning Lounge group chat. So if you aren't involved, head down to the link in the description. It's completely free. Get yourself in the Learning Lounge group chat and you can see the analysis there. Now, should you have any questions with regards to the analysis I've gone through today, as I mentioned before, leave them in the comments below. And if you have enjoyed it, don't forget to leave it a like. I want to say a massive thank you for watching. I hope you all have a very profitable week, and I'll catch you all in our next Sunday Sessions video.